going on in the market. I'll leave it to the legend, the man, the myth, the legend himself. So this will be fun. I'm looking forward to it.
Okay, sounds good. So just wanted to. Well, I guess we could wait a couple minutes for people to come in. I just sent out the link while you were talking, but it's kind of interesting what were you guys watching what Janet Yellen was saying on the live feed there? The congressman, Senator Kennedy, was pressing her about inflation, and she kept trying to brush off 5%. 5%'s not really that big of a deal. And it's like, well, the Fed's about to raise interest rates, which tells me it is a big deal. And she was looking awfully nervous. It's a good clip.
Well, Nixon put in wage and price controls at 5%. He thought it was so high.
Yeah, it's getting up there, right? It's only a matter of time before they have to actually do something. But do you think that they will do something, or they're just going to keep it suppressed?
I mean, they'll keep it suppressed.
Yeah, I mean, if they can keep it suppressed, I mean, let's look at what happened in 2008, 2009. They'd rather let the whole thing collapse than do something proactive and solve the problem. You know?
Yeah, it's just going to keep inching its way up. And then, I mean, even if they do raise interest rates, it's going to be 0.25% each time that they raise it. It's really not going to cut it. So,
yeah, or maybe a whole 50 basis points, go up a whole 0.5%. Well, I grew up when, the normal interest rate was like 5%, or it wasn't the inflation rate, interest rate. So the market set, what the time value of money was at 5%. So a savings passbook account paid you 5%. And I'll make up an inflation number back then, say it was 2%. I don't remember. But once inflation took off and got up to an acknowledged 13%, game was over. And without Volcker coming in, they probably would have had the currency crisis right then and there in late 79, early 1980. But he had such, I don't know what such a strong stance on what to do about it. He just put interest rates at mafia rates, 20%. And I, being overeducated, thought that was the end. Because to me, 20% from the federal government, that's mafia money. That's street money. That's money. Because interest rate's a function of return, but it's also a function of risk. And the risk on the dollar going forward was 20%. Being overeducated, overstudied, and knew too much about monetary history, I thought that was the end. And I was wrong. It was the beginning of killing gold and putting the bond market in the best market it's ever had. But that's ended. That's done now. That whole 30, 35 years of being a bond investor, that's the last place you want to be now.
Yeah, it's funny how resilient the economy really is, because even with the COVID crash, I really thought that was it. That was the end of it. And even on the way down, I was just buying shorts and just kind of just taking fiat off the side. But I was really surprised that we found support and we kind of V'd out of there.
Me too. And I've been at it longer than you. It doesn't make me better, just older. But I've had maybe 5 or 6 things through my life that I thought that was it. Barings Bank went out in the UK, I forget what years ago. And that bank was established something like 1789. And it was sort of like Deutsche Bank as far as clout in the UK, and nothing happened. I mean, it happened in the bank, and it was a big deal for people that bank there, but they got other accounts, moved it to different banks, and life goes on.
Yeah, it's just strange how resilient. But I mean, do you see something that could prevent silver and gold from actually taking off? Like, let's say that they reset to an SDR, or they reset to some other form of CBDC. Do you see anything that can potentially ruin silver and gold's gains?
Well, I have to say yes in a way, because, one, I don't want to be wrong, and 2, there could be something I haven't accounted for, but it's highly doubtful. And the reason is that there's no place really to go outside of crypto when the bond and stock market fails. And there's so much over leverage in the real estate market on the commercial side, because commercial properties are way in arrears because people aren't paying their rent, which means that the landlords can't pay the banks. So I think you're going to see a huge crash in the real estate market on the commercial side. So when all that starts coming down or revalued, then there's really only one asset class that goes against it, and that's gold. And you could argue cryptos now. And so the amount of money that's on the sidelines or in the stock market that's at a profit willing to get out and move to something, man, that gold window is pretty small. So I don't think it could be prevented, but it's possible. I mean, I can't rule it out. Otherwise, it would imply that I absolutely know, and I don't.
Okay. With all the manipulation that happens in the paper silver markets and paper gold markets, when we start seeing an appreciation of price, do you think that the paper markets are going to be the catalyst to bring up the price all around, or do you think it's just going to be a supply and demand gap that kind of brings the value to fair value?
Well, I think they're tied together. I mean, my basic premise for the last 2 decades has been that the paper paradigm will fail at some point, and that's based on supply and demand of the physical market. So when we get the physical market where the paper market can't paper it over, now technically the exchange will say they never failed or they never defaulted, because in their rule book, they'll tell you that they can make a cash settlement on the then going price of silver or gold. So from a legal go to the courts definition, they'd win the case that they didn't default, because again, their backup is we could cash settle, but it's a default. If they can't deliver metal off the exchange, it's a default. So they're protected legally, but not to prevent the market. So once that happens or gets close to that, or they make a new rule and say you can only deliver to commercial interests, you can't deliver for investment purposes, anything along those lines, Darren, would be a catalyst to get more people into the market. And that would drive the price to, let's say, free market levels.
Okay. So there's a lot more industries now that we're moving into this technological age. There's a lot of industries that actually use silver for their products. I was reading that some of the electric cars use like 24 grams of silver per car. Do you think what's like the most exciting area for industrial use that you see soaking up most of that supply?
I just did an interview with this guy yesterday on my mastermind series, and I don't have the whole thing in front of me, but you touched on one, electric vehicles. First of all, everything's going digital. So anything that has a switch uses silver. So think about how many switches are in a modern car. You've got, automatic seats, you've got automatic windows, you've got automatic, GPS, all that stuff. So just an ICE car uses a lot more silver, and an EV uses more than that. So there's the vehicle market, there's the communications market, there's the 5G phones, there's a huge push into photovoltaics for all these countries that want to go solar. And let me stop there and say something. I made a film for Lode, and when we get it done, I'd like you, if you would, Darren, I'll send it to you. I would like you to put it out to your community. I just read this book. Sorry about that. That's the bat phone. No one's supposed to call that phone. I did a video about this book that one of the Goldbug guys had me read, and I read it in a weekend. It's called The Price of Tomorrow. And an entrepreneur out of Canada, and he's very technically oriented and believes basically that technology will save us and that we got nothing but a bright future ahead of us. And his arguments are pretty good, but the one big fault, the way I see it, is his chapter in energy. And he talks about, well, look, you can get photovoltaics, solar panels, that cost about the same as conventional coal burning to produce electricity. Well, that's a fact. I won't argue it. In some places you can do that. But what he doesn't know is the limits. So I took a just a Google search that I filmed with my Camtasia and showed you, all right, let's just power the houses in the United States with solar. How much electricity does the average home use? Popped up the answer on Google. Said, okay, how many panels do you need to produce that much electricity? 30 panels on average. All right, 30 panels uses how much silver? There's your number. How many residences are there in the United States? And multiply that. What did you get? 2 billion ounces of silver on an annual basis. Of course, you can put in those panels for 1 year and they should last 20 or 25. The point being is it would take 2 billion ounces of silver to make that many solar panels, and we only mine 850 million. If you add the recycling, we get about 1 billion ounces of silver. So now it takes twice as much silver as you can mine and recycle in a year to power the homes in the United States. Now, that's just the homes. You know, there's things like banks and theaters and restaurants and schools and churches. So if you look at all the commercial use for power in the United States, it's 50% greater than the residences, which makes sense. You know, you got your factories, your warehouses, your Costco stores, all that stuff. So that would imply 3 billion ounces. So if you powered the U.S. with solar, it would take 5 billion ounces of silver to get that in place. And that's only 5% of the world's population. So this idea that we'll just go to solar is ridiculous. It can't be done. Could it mitigate the use of, hydrocarbons? I would argue probably not significantly, but that isn't going to stop governments from pushing it really, really hard.
Yeah, they certainly are pushing the green energy narrative super hard right now. It's in every single discussion that I'm watching. It's the green energy part of this. So it's kind of strange. So for what's happening with the overwhelming amount of debt and a collapse pretty much that's going to come, are there other investments that you're interested in that are outside of just gold and silver that are and crypto? Is there other commodities perhaps that will benefit from this?
Well, there are, but I want to pause there, Darren. I want to talk about what I think is the next big wave in the crypto space, and that is asset-backed cryptos, particularly precious metals-backed cryptos. And, you know, I am biased. I was right there pretty much at the beginning of the Lode project, put in silver. At the time, you could only come in with silver. You couldn't come in with fiat. You couldn't buy it with Bitcoin. You had to put up physical silver to get involved. And I was happy to do that. And we are the biggest above ground miner of silver that exists. In other words, we're a platform that's blockchain based that really mines silver. It doesn't mine just electricity and come up with a math answer. It mines physical silver. So Nick, why don't you take over for a while and go in a little bit in depth of, you know, what sets Lode apart from the others, and then Darren, I will come back and I'll address the other commodities that I think are really, really important.
Awesome, and thank you for giving me this little moment to shine. Yeah, you know, to echo what David is saying, you know, we do like to think of ourselves as the biggest above ground mining operation in the world. And when we say mining operation, we are literally taking as much silver as we can from as many resources around the world and getting it cataloged and tokenizing it into currencies. Digital gold and digital silver currencies, and putting those into circulation into the world to be used for trading commerce, to offset and to fight back against this serious inflation that we're seeing, not just in the United States, not just in North America, but pretty much the world over. In some places, they're already in a state of hyperinflation. So there is a really strongly felt desire for this type of currency in the world. And what Lode has been doing over the past 4 years is building an engine that allows the generation of this money to happen. And for people who are interested in playing a pivotal role in bringing this system to life, we have our Lode token asset, which allows people to, purchase a security either through the delivery of their own physical precious metals. We used to go under an anchor of saying, put your idle silver to work. It's sitting in a sock drawer right now collecting dust, and you're not getting anything off of it. But why not put that silver into one of Lode's distributed vaults around the world and earn a dividend that in that digital gold and silver on a regular basis? So, this investment is is something that is, I think, wholly unique in the market compared to a lot of the other cryptocurrencies out there. For one, most of the cryptocurrency projects, they're not designed for, real trading commerce. You have them built on slow, clunky blockchains like Ethereum, and it's inefficient. What are you going to stand for 6 minutes in a Starbucks trying to, get a coffee? Like it's just not realistic. And how is a merchant supposed to price their token, their currency, when something like Bitcoin can fluctuate 50% within the span of a few minutes? It's just absolutely ludicrous. But silver and gold are universally understood, and we're active in over 130 different countries. So we really do have a proof of concept here that this is something that is in demand, that people want. And when we talk about how we've brought this to the forefront, people get super, super excited. So, we have one of the fastest blockchains in the world. It can do 140,000 transactions per second, right? So it's instant tap and spend, credit card speed. We have a distributed system. It's not centralized in North America. It's all over the world. It's a distributed team, and as the project becomes more and more operational, the system works autonomously. So there's no one entity that owns this. And we have plans in place to build a payments platform that allows merchants to instantly settle to metal. And we have a very rough expectation that by the end of the third quarter in 2022, we'll be processing $220 million at least in terms of, revenue from different merchants and businesses, all choosing to settle to gold and silver currencies at their foundation. So I know I'm throwing a ton of information at you here, but I really wanted to paint the picture that this investing in Lode and investing in this is not just investing in a cryptocurrency, so to speak. It's an entire gold and silver ecosystem at its core. And the blockchain element is an important foundational role in that, in bringing that silver gold monetary system forward. But it's not the only asset. It's so much bigger. So I'm sure that's probably clear as mud, but I'm happy to answer more questions on what the project is doing and how to get involved. But as always, the best way is always to just jump over to Lode.one, speak to one of our ambassadors, reach out to me, and I'm happy to dive deeper into that accordingly. But I'll put the ball back over to you, David.
Yeah, well, I think the one question, and I'm going to stab at it, Nick, and correct me if I'm wrong, is, well, wait a minute. The big argument against gold and silver is you can't get a dividend. And we can, and the way I understand it is there's friction in the system, just like there is from a coin dealer. So if I see the spot price of silver is $28 and I go down to my friendly silver dealer right down the street, I'm going to pay him like $31, and he's going to collect 3 fiat dollars to make the transaction. That's how he stays in business. We do the same thing. However, of that theoretical $3, I'm just using that as an example, part of that goes to buy more silver. So now we are mining silver and putting it in your vault for you. And that new amount of silver that we got from the friction in the system builds the silver bank. Did I do that fairly well, Nick?
Absolutely. You hit the nail right on the head. And, I should have clarified that as well. All the profits and all the revenue, not just from the sale of the silver, but, from these merchants and transaction processing, all this revenue that we are accumulating is being used to, in turn, get more precious metals and put them into the system. And that's really where that whole metaphor of being that above ground mining operation comes into play. And, we do this through traditional supply lines. We're working on relationships with mining agencies, the supply lines, and we're also squeezing the futures market as well by using delivery options to secure silver as well. So we're really going across all the different avenues that are available to acquire new silver and using the revenues and profits to put more precious metals into the system and catalog it all.
Okay, so it's a payment system that's backed by precious metals, and I can earn a dividend because of the spread that's can you explain that again? How does the dividend come into play?
Yeah, absolutely. So as we sell new gold and silver digitally into circulation, profits and revenues are generated from that. And the Lode token holders are entitled to a percentage of the profits from the operation of that. And that those profits are paid out in the digital gold and silver that we generate.
Oh, cool. And so is this strictly just payments, or is this smart contract enabled? Is this what chain are you using?
Yeah, absolutely. So as I mentioned early on, we use the Syscoin blockchain, which is a derivative of Bitcoin. It's a Bitcoin fork, but it has the ability to do 140,000 transactions per second. And it also has a huge chunk of the percentage of the Bitcoin miners in the world, making it one of the most decentralized blockchains out there. So it's not smart contract enabled. This is designed for trading commerce specifically. So send, receive, and payments. However, the way at the core is the gold and silver. So if there is a demand for something that would rely on a smart contract, we can allocate a chunk of gold and silver and put it on a different blockchain to satisfy whatever need we have. Because at the end of the day, the blockchain is just a digital representation of the silver holdings, right? It's a unit. It's certifying ownership of a gram denomination or a milligram denomination of gold and a gram denomination of silver. So hopefully that answers your question there.
Yeah, it does. And the way that I could personally send silver to the company and receive tokens in exchange, like I could do this all without fiat.
Yeah, absolutely. You can. I mean, I say that with the caveat that the merchant, of course, has to accept cryptocurrencies as a form of payment. We do right now in the United States have our first card program, which allows people to tap and, to send and spend their digital gold and silver, as cash, go buy groceries or, go buy goods online or what have you. But the vision here with the payments platform that we're building is that, merchants will instantly be able to accept digital gold and silver as payment. They could also accept payment in cash and have it land in their account in digital gold and silver as well. So taking those fiat dollars, converting them into digital gold and silver from us, and having their bank account get settled with precious metals, which is pretty provocative stuff.
Yeah.
Let me interject there a second. I'm not sure that that I heard both sides correctly. I think what Darren was asking is if he just sent in 200 ounces of silver into the system, would he get it tokenized and then he could just hold it for, whatever purposes he wants, spend it as he chooses. Is that what you asked, Darren?
Yeah, that was.
Oh, okay. I apologize for misunderstanding the question. So just taking a couple steps back, Lode has three assets, right? It has its equity asset, which is the Lode token. And then you have your digital gold and your digital silver, which we call our AGX for the silver and AUX for our gold. If you're buying a Lode token, you're purchasing that security. You can hold it. You can trade it eventually on the secondary market when we list. And it is a speculative asset in which you are going to gain a dividend every 52 days in the form of digital silver. And so that is how the Lode token works. And that Lode token entitles you to partial ownership of the entire Lode ecosystem, right? And those dividends come from selling the digital gold and silver into circulation across the world to businesses, to individuals, and the like. So if you
sorry, I didn't mean
go ahead, David. No,
so
it's all good.
Just to make it hopefully a little more clear, there's basically two sides. I think Nick can back me up here, but if you put in physical metal, Darren, you are going to get it tokenized. So now you are able to receive the dividends. However, Let's say someone just really wants to work in the tokenized gold and silver platform. They only directly buy AGX or AUX, and they are only on that side only. So they're working in that platform. But it's only those that have contributed physical metal or bought metal through the system that are able to receive dividends.
That's correct. Yeah. So you have to purchase the equity asset, and you can do that through our designated bullion dealer who puts silver in or gold in the vault on your behalf, or you can deliver your own physical metal in, and that makes you a stakeholder in the system. Or, as David mentioned, on the other side of that, you can just be a holder of the digital gold and silver, but you're not going to receive any dividends for that. You're just holding the physical asset in a virtual way. Clear as mud?
Yeah, I think I have it now.
Yeah. So David, let me quickly wrap up here. We are, now a community of very close to 9,000 people, and growing quite rapidly. We're doing some really exciting stuff with our payments platform. If you're interested in learning more about what Lode is doing and the Lode token and how we are bringing gold and silver currencies to life in the world today, head over to Lode.one, have a chat with me, have a chat with one of our ambassadors. But I think we still need to get to the other half of Darren's questions, which what are the other commodities potentially out there that you might be interested in?
All right, thank you. So, Darren, there's and everyone on this Zoom, I could go on for days, but let me keep it to the strict idea that the commodity sector is going to be in a bull market, has already started. So in the metals, all the metals will go up. The palladium market really is outside the paper paradigm. The amount of palladium needed for catalytic converters is at the limit. In other words, all the physical palladium mined is needed to go into cars. So that is why that market is so high in price and doesn't vary that much. Yes, I know it got whacked down $300 when we had the big paper sell-off of gold and silver, because it is a bit sympathetic because it is traded on the futures market. But basically, it's physically driven. There is not the amount of palladium that is mined will not meet the needs going forward from about 2 years onward. So there'll be a gap, and you can't fill that gap with anything but platinum. So I put out to the Morgan Report paid members several months ago that you might consider swapping palladium for platinum, or if you want, just take a platinum position. I sold all of my palladium and swapped it, and platinum is like the last metal that you buy. In other words, it's a lot smarter to buy gold and silver. They're both considered money, especially gold. When you get into the PGMs, you've got to be a pretty sophisticated investor. But Darren asked the question, what do I see? I see a big gap, and I think the gap will be filled because platinum and palladium are substitutes for each other, even though you won't read that in the mainstream press, they are. The next one that's very concerning to me is the energy cliff. The only reason that we have been energy independent, I put that in quotation marks, is due to fracking. Fracking is extremely inefficient, and the decline curve on a fracked well is like a bell curve, except the timeline on this bell curve is very short in duration, like 5 years, 4 years, 3 years. So you get a big flow of oil for a while. Most of it's natural gas, and then it depletes extremely rapidly. So it's like running on a treadmill. As long as you're running fast and you've got enough energy to keep running it, you're going to get more oil out. But it isn't that efficient. It's called energy return on energy invested. So if it takes 1 barrel of oil to produce 100 barrels in a conventional oil well in the 1900s, you've got some money pouring. You've got 100 to 1 return. A fracked well is about 5 to 1, 6 to 1. Very inefficient. So when you analyze it on an energy basis only and not on a financial basis, we are in peak oil right now, or within a year or two. I'm convinced of it, which means I see oil going to $100 within the next couple of years, minimum. And once oil goes higher, that's how the planet runs. It doesn't run on finance. It doesn't run on the stock market. It doesn't run on the banking system. I mean, we use that, but it really runs on energy. So it takes energy to produce everything: transportation, communication, all our electricity, everything. And when that increases, it's going to go across the board, which will be inflationary. And so I'm looking for the energy sector. I'm looking for the metal sector. I'm looking for the agriculture sector. And one thing about agriculture is it's hard for the average person to hedge in foodstuffs other than outright buying food, which I'm not against. In fact, if you're, let's say, of modest income, rather than buy silver, I tell you to buy food. I mean, I'm being honest here. But here's a kicker that most people aren't aware of. In the modern day, it takes 10 calories of energy to produce 1 calorie of food. Think about that. That's how inefficient these monoculture farms are right now. So we really are heading off a cliff, as a metaphor, in energy, in food. And of course, I think anyone on this call, and I know Darren fairly well, and I'll compliment Darren because he puts out so much information I can barely keep up, but it saves me so much time because he goes out there and filters all this stuff, and I get to just bing, 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 hit the highlights. Thank you, Darren. I digress. Let me come back, but it's very much appreciated. So we are in a situation where commodities are going higher and higher. Try to stay out of debt. Try to live within your means. And try to be comfortable with what you have. Enjoy what you have rather than looking for, more material goods, because we are really going to be in a paradigm shift globally on lifestyle changes for almost all of us. So I think that covered it. If you have any specific, on the food, how do you hedge? No one should be in the futures market unless you're a professional. So the best way to hedge in the food industry is to find something that I recommended a while back. Someone asked me, David, you said, and I was ahead of the curve on the food situation. I said ADM, Arthur Daniels Midland. I don't like them per se for personalities, but I'm kind of an agnostic when it comes to investing. If it's going to protect my portfolio or help me gain money or protect, my food costs, I'm willing to do it. And they're not criminal or anything, but they are somewhat corrupt, not nearly as bad as some other entities I can name. So ADM has already doubled. But when I recommended it, it was right before one of the recent crashes in the market, and it came right back up. So that's one. I'm not saying that's the only one, but you can, do your own research. It's always better to buy the best of the best. Most people, when they buy stocks, buy the cheap stocks. That's the worst thing you can do. You want to buy, you're much better buying a stock that's worth $100 in most cases than a stock that's $1. Even though you're going to get 100 times more shares at the dollar price, cheap stocks are cheap for a reason. When you go out to buy a car, you buy the best car you can for the money. When you go out to buy clothes, you usually get the best clothes you can for the money. You buy food, the same thing. When people buy stocks, they look for cheap ones. You don't want to do that. You want to find the very best. And there's a whole philosophy behind that. If you're interested in the stock market, I recommend a book called How to Make Money in the Stock Market by William J. O'Neill. You can find it on Amazon or Amazon or somewhere else. And How to Make Money in Stocks by William J. O'Neill. Read that book. You will be 10 years ahead of anybody else just by reading that one book. So, end the pitch, Darryl. If you have any specific questions on any commodities or anything else, I'm here for you. I'm getting kind of wound up. I'm getting warmed up now. So,
well, I was thinking. I was watched a Rick Roll interview where he's talking about the uranium markets, and he was saying like uranium's at an all-time low, and we're going into this debasement of currency where tensions are going to kick up. So, do you have any specific thoughts on the uranium?
Yeah, no, we've made, in fact, all we're really recommending right now is uranium, gold, silver. I just mentioned platinum and some asymmetric trades in the crypto world. With your help, I did XRP. I did three. I did XRP. I did Ethereum because I thought they were the two best and safest. And then we had a little blow up with XRP. We won't go into it. And then a mutual fund run by Frank Holmes. I forget the name of it, HUD 8 or something anyway. So we've got three cryptos in the speculative portfolio, one uranium company, and everything else is either top tier, mid tier, or speculative on the gold and silver side. I'll give one free to your viewers because, this is a speculation, so bet a little, win a lot. It's called EnviroLeach Technology. It's on the Canadian exchange, not the Vancouver. So it's a little bit hard to find, but you can find it on Google. Everyone that listens to you, Darren, is very adept at the web on the internet. Just type in EnviroLeach Technologies. The symbol is ETI, but again, it's not the ETI in the Vancouver. It's ETI on the Canadian exchange. Read about it. Bet a little, win a lot. It's a great recovery from electronic waste. So all the printed circuit boards is out there floating around. We recycle them. And I am involved in the company, so I am biased. In fact, I've consulted with the company on a few occasions. But it's one of those game changers because it's green. The only way to get recycled metals now out of printed circuit boards is to smelt them out, and it's very toxic. This fluid is inert. You could drink it. And so it takes the process to a whole different level, and it can be used anywhere in the world because it's environmentally friendly. And that's the big kicker.
So you brought up crypto, and it's what's funny right now is all of the coins, the enterprise utility coins that central banks would build their infrastructure on seem to be the most suppressed during this bull run, and it seems that the other coins, the meme coins and everything are the ones that are taking off. So it's just, it's weird that we're so close to central bank digital currencies, and that the coins that can help that infrastructure are the ones that are price suppressed. It's almost like, like the silver market.
Yeah, I'll comment on that if you want.
Sure.
Well, first of all, we recommend Lode in the report too. That's kind of goes without saying. So we write about it. We write on the blockchain and have for at least 2, if not 3 years, every month. And we, feature Lode and update it in every report. But back to you, it reminds me kind of the tech wreck. At the beginning of the tech wreck, when all you had to do is put a .com after something and get some high valuation. So, idiots.com, I'm going to make you a fortune.com, call me your mama.com. All those things just flew, and they had no business plan, no revenues, nothing. And they just went crazy. And your Amazons, the Yahoos, the ones that are still here today, really did appreciate, but not to the level of what you call meme cryptos. So I see it kind of as a metaphor for what's going to take place. I think there's going to be a pretty big crash in the crypto world, actually. Absolutely. And I think it's going to get rid of a lot of these SHET coins. And what's going to be left after everything sifts out is the Yahoos and the Amazons of the crypto world. That's what I see. So it doesn't really worry me. In fact, to me, it kind of confirms my thinking. Whether or not I'm right or wrong remains to be determined.
Yeah, absolutely. If I can tack on a couple extra pieces there, because obviously I'm biased, and this whole space just gets me pumped. But the market is cyclical, and this is not unlike what we witnessed during the last the last sort of crypto winter that we went into. And I do think that we're heading towards the point where crypto will probably go quiet for the next few years. Presently, right now, one of the big blockers in the crypto space is that while there are lots of great ambitions, the technology isn't there yet. Right, there is predominantly only speculative use of cryptocurrencies, and we're not quite yet at the point where the infrastructure for merchants and businesses and central banks is at the point where it's simple and easy to use. It's getting there, and we've certainly gotten to a point where trading them and buying them and getting into the market is good, but practically integrating them into massive ecosystems such as the banking infrastructure and so on and so forth. There's still a lot of legwork there needs to be done, and some of this has been echoed in what you're seeing in the news and media cycles, right? So Tesla is accepting Bitcoin. Bitcoin's not environmentally friendly, and so they pulled accepting Bitcoin as payment. And this kind of news cycle kind of trickles down. Now everybody's talking about, I see on everything, well, we're not going to do Bitcoin because it's not environmentally friendly, or it's not practical in the long run, et cetera, et cetera. But none of this, it's not like the technology that underpins Bitcoin has really changed all that much. It still is what it was, more or less, when it initially launched. So the efficiencies component of things, and the fact that the technology of the entire space isn't quite there yet, I think is what's leading the charge for this current sort of downtrend that we're going to go into, or that some argue we're already in there. I see it as a great opportunity because that mass adoption is going to come. If you look at what a lot of the big money in the world is doing, they're saying by 2026 they're going to move at least 7 to 10% of their portfolios over to the cryptocurrency blockchain ecosystem. So really, lots of people like myself have been waiting in the wings, saying, I'm waiting for this crash so that I can get in at a reasonable rate again, because that mass adoption is going to come. If you look at the global financial institution, most of them have blockchain departments now and are rapidly working on that development. So I think in 3 to 4 years' time, we're going to be in another bull market, so to speak. So just wanted to add my 2 cents in there if I could.
Yeah, I agree. If we go into another bear market, it'd be the best opportunity for us before we actually hit adoption. I mean, it's going to be, it's not fun to lose a bunch of value, but at the same time, it's an opportunity for the long run.
Yeah, absolutely. It is an opportunity for the long haul. And, there was last time, I can't name on my fingers and toes anymore how many times Bitcoin has quote unquote died. But if you follow your nose, Toucan Sam style, and you follow the money, it becomes abundantly clear what is happening. And that is that the entire financial sector is moving over to blockchain. You have institutions like Visa, like PayPal, now saying that they're going to settle to USDT. The fact that Visa is saying that they're going to settle to a USDT or a USDC rather than traditional currency or traditional cash as we see it should be a very clear indicator for a lot of people that this isn't just a bubble. And it's not just whimsical. It is something. It's a piece of technology that's going to be very, very integrated and eventually ubiquitous with payments. But of course, I'm biased, right?
Right. So am I.
Yeah.
I think you're right though. It's everything's aligned with that. All the news announcements that you look through the fintech news, they're constantly making these integrations with blockchain. It's not. There's something there.
Yeah, but the reality is that it takes time. Like, this is innovative stuff that's really only been around for a fraction of a decade. The web that we're currently existing in right now is the end of the web 2.0. We're starting to bridge into web 3.0, arguably, right? And so blockchain is in its 1.0. Hopefully this metaphor is translating well, right? And when we start getting to an ecosystem that's kind of at a 2.0 level, I think that's when you're going to see that mass adoption that everyone talks about. But Lily Chang has a great question. Why is platinum price so low compared with gold? I consider they're the same if they are in the same league. David, I think this one's for you.
Okay. Yeah, platinum, the noble metal. Platinum is 15 times more rare than gold. So you often hear the argument about silver that, silver is about 1/10 it is 10-to-1 ratio in the ground. So for every ounce of gold in the ground, there's 10 ounces of silver. So why isn't the price of silver 1/10 the price of gold? Really, that ratio doesn't have a lot to do with it other than a fact. The fact is of how is it distributed in the earth, a ratio of gold to silver, silver to platinum, or whatever. So it is very rare. It was always almost always holding a premium to gold. Once in a while, it slipped down and be under the price of gold. It was an easy trade, and I made that trade many times. And this last time, thank goodness, because I let the market tell me what it's going to do. I don't tell the market what I'd like it to do. I held off. The reason is pretty simple, but it won't be simple to answer. Platinum was used for catalytic converters almost exclusively, diesel and gas. Palladium was a lot cheaper than platinum at the time. Ford Motor Company was going to save money, so they changed their line of automobile production from platinum to palladium. And when they did that, they didn't realize how small the palladium market was, and they drove the price from like $200 to $1,000 almost instantly. That shows you what I've always advocated. One of Darren's early questions to me is what will happen when the physical market takes over the paper paradigm. Palladium's a perfect example. So once they made that change, then they stuck with it and they kept using palladium. So now we have the reverse. As I said earlier, platinum is much cheaper than palladium, and they'll save money by putting platinum into catalytic converters. And I'm pretty certain that will happen. There's a paper put out by the Platinum Guild that I think I posted it on my website. You can get it for free. Just Google it and you'll find it. So that's the reason. The second reason is this generation, platinum does have some use in jewelry. It's a long story and I don't have it exactly right, but during World War II, you couldn't use gold in Japan. you could, but as a precious metal, but you could use platinum. So platinum became the jewelry for the Japanese, and it held that for quite some time. This generation just ignores platinum jewelry. So there's really no demand other than industrial. There's more above ground platinum per unit needed than there is palladium. Palladium's in a deficit, or nearly so will be in the next couple of years, like I said earlier. So the play on platinum is that it will be used instead of palladium, and it's undervalued relative to gold on a historic basis. But there is enough above ground, which isn't very much, by the way, to hold off any appreciable increase in price for a while. So if you've got some patience, you could buy platinum. I have it. I'll show off a little bit here, but that is a roll of platinum. Platinum is denser than gold. That little box right there is about $12,000. So you show me anything on your desk that's that small, that's worth 12 grand, and you're not a stamp collector or a fine art collector or a coin collector. You could have a rare coin that's worth a lot more than that. That's one coin. So that's it. I'm bullish on it, but be cautious. The one other caution about the PGMs, the platinum group metals, when you buy them and you buy the physical, like I just showed you, the spreads are really high. So when I buy, I pay a big premium to buy the coin. When I go to sell, I usually have to eat a big premium on the sell back. So be advised. Now, when I bought my palladium, I won't lie, but I paid a pretty big premium buying it. And when I sold it, the spread was like $100, because the buy sell on the palladium when I sold it was pretty near the top. It was like 2,600 and 2,500. So I got 2,500 while the dealer could sell it at 26. So, but I like it. I wouldn't overload on it. And hopefully I answered your question.
What about nations that are still producing, that are manufacturing goods and services? Is looking for stocks and maybe currencies in other nations, would that be a good hedge for what's to come?
Only momentarily. I call it the banker's last vestige of hope. Like, take India. India usually imports a ton of silver. Last year, they really didn't have hardly any imports. Why? Because the paper price of silver in the rupee was at an all-time high, which convinces the people, and I'm not saying it's wrong, it's just, I can sell this silver and get these rupees, which is how you do exchanges. If you did exchanges directly with silver, you probably wouldn't see as much of a deterioration in the amount of metal entering or leaving a given country. So if you know what you're doing, I don't like currency trading. You can have the perception that it's worth doing. And in monetary terms, it could be for a while. But at the end of the day, they're all pieces of paper with no intrinsic value whatsoever at all. And they're all basically go when the dollar goes in a big way.
Okay. What are your thoughts on BlackRock swooping up all the real estate?
Well, these are basically criminal enterprises. I won't mix my words. I mean, money in my study, and I've said it on other interviews, that money is power, and money can control a lot of people. Some people can't be bought, but they're rare. And so when you can print, if you just think about it on a small scale, if you had a printing press in your basement and you could buy up everything, it's like the George Carlin, the George Carlin, I won't call it a skit, it's one of his talks, I'll call it. He says, they own everything. So they do. They printed enough paper to buy all the great corporations, all the great real estate, all the farmland, all the oil fields, anything of real wealth, which isn't paper, they own it. So if the price goes to zero, it doesn't matter because they own real things of real value. And that's the deal. So did we lose the connection? No. So it really doesn't matter to the elites whether or not the price of a stock is 100 or 10. And I know that sounds stupid if you're a stock investor, if you own the company. And so that's the real deal. They own the real wealth. And as George Carlin said, It's one club. I don't think he says big club. It's a club, and you're not in it. They own you. You know, and you could find that. I think some of your members have probably seen that. If not, I don't even know how to Google it. Just George Carlin rants about money or something like that. You probably find it. But it's very, very truthful. And it's very, very accurate. Only most people don't believe it's like that. They like to think they're free and that there isn't that much control and everything else. But the truth of the matter is money is power and money is control. And it's used all the time for those two purposes.
Yeah, it's a good skit with George Carlin. It's one of my favorites, honestly. Is there anybody in the chat that wants to ask a question? I don't think so.
All right, going once, going twice, sold.
So the Lode website has a couple really well produced, in my opinion, videos, kind of give you an overview. If you're in the crypto space, you might consider, gold and silver backed cryptos. Let's face it, they're tied to the metals. So in my view, you're getting them cheap now. And I do believe, and this is conjecture, that the next big wave after this crypto winter, as Nick referred to it, you're going to see, I think, a lot of people kind of wake up to what is value and what isn't. And I think that the gold and silver based ones, maybe the stars, I don't know, but I think there'll be a lot more interest in those because gold and silver have been money for thousands of years, and I don't think it's going away anytime soon.
Absolutely. And I couldn't agree more, David. The stable coins, and even today, I'm witnessing people all over the world waking up on an insane basis to the fact that the money that they have right now is inherently worthless. The sheer amount of interest we have from businesses and merchants about being able to use a gold and silver currency in their day-to-day lives functionally, the amount of enthusiasm when we tell businesses that we can help them do that is just surreal. So, thank you for bringing me on the show, Darren. It's been a pleasure being here, and thank you, David, as always, for advocating for us. If you're interested in learning more about what we're doing, head over to Lode.one to check out our website, learn about our assets. We're about to go live on our first exchange as of next week on the Hotbit exchange. Our digital gold is AUX. Our digital silver is AGX. And yeah, I think the future for silver and gold specifically as monetary vehicles, I think they're destined for a very powerful comeback. And we'd love to have everybody on this journey with us. So come say hi. We're pretty friendly.
Thanks. If you send me like a white paper or something, I could post it as well.
Oh yeah, absolutely.
I'll get you the links and everything as well.
Yeah, just give me 1 minute here.
David, is there anything you want to say before we finish?
No, you know me, I'm never a lack for words. Just want to say appreciate what you're doing, Darren. I think you're being of maximum service to a lot of people. I think your head's definitely on straight, and I think you have the ability to look pretty deep and sift the wheat from the chaff. Again, it saves me a lot of time because I need to be involved in this space, but it isn't my main purpose. My main purpose is honest money and, the precious metals and the other commodities. I have to look at all the resource stocks, which means lithium and rare earth elements and moly and uranium, like you brought up, and all those. So I don't have a lot of free time. So what you do is save me a lot of time and effort. And the other thing is the enthusiasm of, the next generation. You and Nick give me, I don't know if hope is the right word, but the strength to continue on my own destiny and see there are people behind me that have the kind of passion and conviction that I have. And it just makes me very, very grateful.
So the Four Horsemen movie that you were in, that was something that inspired me to get into all this. And then I just put it on the other night, and I was like, hey, that's David. I know him. I didn't realize it when I first got into it, and then I rewatched it. It's a great movie.
Thank you.
So the mortarreport.com is how you can find David, and
yep.
Lode.1 is how you could find Nick's project. If anybody's interested, please check them out. I'll include links into the description of this video. Thanks for coming on to my show and educating my audience. I really appreciate the time that you guys put in.